Good evening, everyone.
Good evening, sir.
Good evening.
Sir.
Good evening,
sir.
Good evening, sir.
Good evening, sir.
Yeah, come on, quickly switch on your cameras fast. It should be on before I enter the class, right? Yes, fast, fast. Yes. All right. Yes. Everyone remembers me? You remember the subject?
Yes, sir.
Yes, sir.
Everything is completely fresh. Aman sir and the subject, huh? Remember or not? Little bit. Not everything. I know you won't remember everything. Little you remember? Yes?
Yes.
Okay. We'll see. We'll see. Okay. I know that first thing always we have to start with the definition of accounts. I know it is already done, but can you guys do it again? Yes? All right. Come on. And all of you, okay, unmute and then tell what is the definition of accounting? Quick.
Accounting is an art.
Summarizing in significant manner and in terms of money transactions, even which are in part of at least of financial in character and interpreting the result of their.
So, accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial in character and interpreting the results thereof. Yes. So, I hope everybody remembers the definition. Correct? So, I started off with which chapter? Accounting process, if you remember. Yes. What is a process? I told you any process will have some input and a desired output. Remember? Yes. It will have an input and a desired output in terms of accounts, right? What is your input? Yes. You have your invoices, you have your, day book and all of this, correct? You have your other documents, bank statements, all of this is your input. This input you will use to record it in your journal, ledger, and then finally summarize it in your trial balance and then prepare the output, which is my financial statements. Remember, this is my accounting process. Correct? Now, what are the types of accounts we learned? First one, yes, come on, tell me. Types of accounts? Personal account, real account, and nominal.
Real account, nominal account.
Personal, real, and nominal. What are the different types of personal account?
Natural.
Natural,
Artificial account and artificial personal account.
Personal account.
Representative.
What is natural personal account? You and me, correct? That is Aman is a natural account, and then Rama, Sita, Rakshita. All of these are my natural accounts. Artificial will be your companies and organizations. Yes, ABC Limited, XYZ Private Limited. Correct. All of this is my artificial account. Representative personal account. Best example that we always say, even
Outstanding expenses.
outstanding. Yes, that is my, for example, salary payable account is one such example for representative person account. Remember all this, all of you? Yes.
Yes,
So I'm
sir.
not going to dwell deep into this topic. It's basics and sir also would have covered, right? Reasonable. Next, your golden rules of accounting. Yes, for personal account, what is the golden rule?
Debit the
Receiver
receiver of the benefit.
Debit the receiver of benefit, credit the giver of benefit. Next, for real account,
Debit what
Debit
What comes in, credit what goes out.
credit what goes out. Nominal account,
Debit all expenses and
Losses, all incomes
all
and gains.
losses, credit all incomes and gains. Clear all of you? Yes. But in the modern, system of accounting, there's a shortcut method we taught you guys, wherein you can easily account even without knowing the golden rules of accounting. Yes. What are debited and what is all credited? Yes. When it comes to your P&L, right? All the incomes, profits, and gains, they're credited or debited?
credited.
Debited.
The expenses and losses, they are
Debit.
in your balance sheet. Assets are
Debited.
Balance.
liabilities are
Credited.
whenever asset increases, you will debit. Whenever asset decreases, you credit.
Credit.
Whenever liabilities increase, you will credit. Whenever liabilities decrease, you will debit. Income, if it increases, you will credit. Income, if it reduces, you will debit. Losses and expense, if it increases, you will debit. Expense, if it reduces, you will credit. Remember this, very simple. Remember this, and then you can pass any journal entry, provided you know what is income, what is expense, what is loss, what is asset, what is liability. If you get confused between liability and then an asset, or liability and expense and liability and income, then I cannot help this. As long as you can bifurcate them into this basket of income, expenses and losses, assets and liability, then you can easily account any transaction. Clear, all of you? Yes. Next, then we learned different methods of preparing trial balance. So first of all, what is a trial balance? It is a summary of all the ledger accounts. Remember? Yes. It is the basis for preparation of financial statements. Correct? It is a summary of all the ledger accounts, and it is a basis for the preparation of financial statements. And trial balance ensures only
Arithmetical accuracy.
Yes. Trial balance ensures only the arithmetic accuracy of books of accounts. Therefore, errors of principles, errors of commission will not affect the trial balance. Correct? So, if I say that trial balance is tallied, it doesn't mean that everything is perfect. Yes. It doesn't mean that everything is perfect. It only means that there is arithmetical accuracy. Remember this point, all of you? Yes. If trial balance is not matching, then temporarily it is matched using what?
Expense account.
Expense account. Very important to note, it is temporary. Yes, it is not a permanent solution. Therefore, using suspense account doesn't mean that, the reason for preparation, or the reason for creation of a suspense account is not to tally the trial balance. It is what? It is not to delay the preparation of financial statements. Remember this point, all of you. That is why it's a temporary solution. Yes, very important. What are the different methods of preparing trial balance? First one is total method. Remember, wherein we take the total of the debit and total of the credit. Remember, all of you. But whenever you're taking total of debit and credit, you will not take the balance. Yes, the balance carried down, you will not take. Remember all? Yes, total of debit column and total of credit column you will take. But remember, very important, the balance carried down amount should be ignored. Yes, only then your trial balance will tally. Otherwise, it will not. Okay, next.
Balance method.
Balance. Yes, what is balance? Very simple. Whatever is the balance in each ledger account, that you will take it as debit balance or credit balance. That is the most common method that you have been doing right from your PUC days. Yes, whenever nothing is mentioned, we always follow the balance method. And the last one, which I told you is the most appropriate and better analysis one, that is total and balance method, wherein you have both the total as well as the balances. Correct? Trial balance will have 4 columns, 2 columns for total and 2 columns for balance. Clear, all of you?
Yes.
Yes, sir.
Yes. Next, we learned in accounting process, accounting equation. For that, very simple, what you have to remember? Equity plus liabilities is equals to assets. Yes, all of you remember this?
Yes.
Equity plus liability is equals to assets. Yes, wherein we expanded this equation to say equity plus long-term liabilities. So liabilities are split now. Yes, as long-term and short-term. Okay, so equity plus long-term liabilities is equals to assets. You split it as fixed assets and current assets. Okay, minus that current liabilities will come here to the RHS and become minus current liabilities. So the expanded equation is equity plus long-term liabilities is equals to fixed assets plus current assets minus current liabilities. Remember this equation? Yes, I repeat, the basic equation is equity plus liabilities is equals to assets. Correct? Here equity will remain as it is. Plus liabilities, you split it as long-term and current. So equity plus long-term liabilities is equals to minus current liabilities, you take it to the end. Okay. When it goes to the RHS, it becomes minus. Then assets, you split it as fixed asset plus current assets. Remember this? This is the expanded equation for accounting equation. Wherein very simple, they will have given you one or the other figure. You have to find out the other figure as a balancing figure. Remember this, all of you? Yes, simple concept. And then we also learned while solving problems, 2 different types of discount. One is trade discount. What do I mean by trade discount? It is the discount allowed at the time of
Purchase.
At the time of purchase. Therefore, it is not accounted separately. Correct? Trade discount, you account for the trade discount? We never account for the trade discount in the books of accounts. Clear? It is given at the time of purchase. Cash discount is the discount allowed at the time of
Payment.
payment or settlement, and mainly because to encourage prompt payment, therefore it needs to be accounted. Remember? Yes. So there are two different types of discount. One is trade discount and cash discount. I hope all of you understood. Clear, all of you?
Yes.
Excellent. Excellent. Okay. Next. Then this is my accounting process, right? Then we learned subsidiary books. Yes. What are subsidiary books? They are the books where the transactions are first recorded. Yes. Subsidiary book is also a journal itself, right? Wherein transactions are first recorded, and which organization will opt for subsidiary books? Normally, where there are large group of transactions. Very good, Mantal. Yes. Normally, when there are large group of transactions, that is when we go for subsidiary books. Correct? Why? If you remember, yes, because journal will be based on sequential order. Correct? If I need all the purchase in one place, all the sales in one place, then it is better to prepare subsidiary. Yes, the totals of the subsidiary books will be taking it to my ledger accounts. So I don't have to individually record the transactions in my ledger. Remember? Yes. Next. So what are principal books then? They are the books wherein information is furnished to prepare the financial statements. Books wherein information is furnished to prepare financial statements. My major example of principal books is my ledger accounts. Remember? Yes, subsidiary is a type of journal wherein transactions are first recorded. Ledger are my principal books. Ledgers are my principal books. What are some of the examples of subsidiary books? First one, cash book. Yes, purchase return, sales book, sales
Return. Bills payable.
and journal proper. Yes, so you have your cash book, then your purchase return, sales return, bills receivable, bills payable, and journal proper. Yes, what is recorded in purchase books?
Credit
Purchase
of goods.
Credit purchase of goods only. Very good. Yes, credit purchase of goods only. Correct. It has to be credit purchase of goods. Sales. What's recorded in sales book? Credit sales of goods only. Correct. So if it is a cash sale, where will it go?
Cash book.
Cash. If it is a cash sale of fixed assets, where will it go? If it is a cash sale of fixed asset, also it will go to cash book only. Yes. Anything where cash is involved, it will go to cash book. Yes. If it is a credit sale or credit purchase of fixed assets, then only it will come to journal proper. Yes, then only will come to journal proper. Next, what is recorded in sales returns or inward book?
The return.
Whatever you are recorded in your sales book, if those goods are returned, it is recorded here. That means goods which were sold on credit. First of all, it should be goods. It should have been sold on credit, and now it is returned. Only then you will return. You will record it in sales return book. Same thing with purchase returns book. Yes, same thing with purchase return book. That means it should be a purchase and it should be on credit of goods only. If it is returned now, then it is recorded in purchase returns book. Clear? Yes.
Yes, sir.
That means what is recorded in journal proper?
Any
All
entry
the other
which is not
All
transactions.
the any entries which are not recorded in the above books, you can record it in journal proper. Correct? What are some of the examples? Opening entries, closing entries. Yes, rectification entries. That time when I taught you guys, you didn't know what rectification entry is. Now you know, correct? Rectification entries, transfer entries, adjusting entries like your outstanding expenses, prepaid expenses, depreciation, all of these entries, any other miscellaneous entries like credit purchase of fixed assets, then bad debts, etc. These are the examples that remember this. Yes, all this is my subsidiary book. Okay. Next, we learned cash book in detail. All of you are able to catch my pace?
Yes.
Yes, sir.
I'm hoping that you are able to recall. Yes or no? Obviously, I'm not teaching this for the first time. It's a revision class. So I hope you are able to recall whatever I'm teaching. Yes or no?
Yes.
Yes. If you want me to go slow, you let me know. I'll go slower. No problem. Everybody is okay with the pace. Anybody wants me to go slower? Clear? All right. Next, this is important wherein questions usually come in the examination. That is my cash book. Yes, it is treated as both subsidiary as well as cash book is treated as subsidiary as well as my subsidiary is nothing but journal. Subsidiary as well as
Principal.
principal books. Very good. Yes, it is treated both as subsidiary as well as principal books. Cash book is one such book which is treated both as subsidiary and principal books because it is a book wherein first transactions are first recorded. Also, it acts as a ledger account. Correct? Also, it acts as a ledger account. Now, what are the different types of cash book? First one, simple cash book. Yes, simple cash book, normal cash book wherein you have the receipts and the payments. Correct? So always remember in cash book, the debit is always debit total is always greater than or maximum it can be equal to the credit total. Correct? Can the credit total be more than debit total?
No, sir.
No, sir.
Cannot be. Why? Because you cannot have negative cash. What do you mean by negative cash? You are spending more than what you've received. How can you spend when you have not received at all? Right? So cash book can never have a negative balance. Right? Next, we prepare 2-column cash book. Right? That is what? Along with cash book, you have one more account which is either discount or bank. Either discount or bank. Normally, first preference is given to which one?
Discount.
Discount column. First preference, remember, if you have to choose, then it is discount column. Discount account, right? On the debit side, what is it? It is an expense or income?
Expense.
Discount allowed.
Expense, right? That is my discount allowed. On the credit side, it is income, that is discount received.
Discount
Remember
received.
this? Yes. Discount
Yes, sir.
accounts are not balanced. Very important. Discount accounts are not balanced. They
Yes,
are
sir.
totaled and posted to their respective ledger accounts. Yes, discount accounts are totaled and posted to their respective ledger accounts. All of you remember this? Yes?
Yes, sir.
Yes, sir.
Yes, very good. Next. Triple column cash book, where you have 3 columns, that is cash column, bank column,
Bank,
and
discount.
discount column. Yes, cash, bank, and discount column. Here also same thing, that is discount columns. Debit side is expense, credit side is income, and it is total but and not balanced. Right? What is the special treatment in triple column cash book, wherein both bank as well as cash is there? Contra entries. Remember this? Yes, contra entries. That is, whenever entries which affect both cash as well as bank account, it is called as contra entries. Normally, it is a deposit of cash or withdrawal of cash, wherein you mention this transaction with the bracket C. Yes, you to mention it with C within bracket, and it will affect both the columns, cash as well as bank. Okay. Where do you mention C? In the ledger folio. Yes, in the ledger folio, you mention it as C. Next, we learned what is petty cash book. Yes, to reduce the burden on the main cash book of all small petty expenses, petty cash book is maintained. Yes, to maintain petty cash book, to record all small cash payments, to avoid unnecessary burden on the cash book. It is periodically transferred to the cash book. Okay. Yes. Next, we have under petty cash book, you have analytical petty cash book. What does it mean? One column you'll have for receipts, and then multiple columns you'll have for various payments of various types. Yes, just like how in your 2-column cash book you have discount column, same way here also you'll have different expenses, right? Where again these expenses are not balanced, right? Because nominal accounts are not balanced, they are totaled, correct? So they are totaled and then taken to the respective ledger accounts. Clear, all of you? Yes, that is my analytical petty cash book. And then you have impressed system. What does impressed system means? At the beginning of every period, amount spent in the previous period will be given to the petty cashier. Yes. So that it ensures that the petty cashier at the beginning of every period has a fixed amount. So if the petty cash limit is set as 10,000 rupees and in the previous period he has spent 5,000, at the beginning of the next period, you will give him 5,000. So that he always has 10,000 at the beginning of the period. Clear, all of you?
Yes.
Yes. Then the last concept that we learned in cash book is what? Sale through debit or credit cards. Remember this? Yes. It is equivalent to anybody?
Cash
Cash
sales.
very good. Is equivalent to cash sales only. Therefore, the entry is very simple. Bank account debit to sales account, and commission account will be debited and credited to bank account. Remember this? Yes, it will be bank account debit to sales account, and commission whatever is charged, you debit it and credit bank account. All of you clear? Yes.
Yes.
Yes. All of you have the revision material?
Yes, sir.
Yes, sir.
Okay. Quickly open the revision material. Let's go through the theory and then we'll solve the cash book problem given in the RTP. Page number 7. Page 7. Yeah, all of you found it? Yes, one of you read?
Yes.
Yeah, one of you read it.
May I, sir?
Yes, anyone can.
Accounting process, recording journal including subsidiary books, classifying ledger, summarizing, preparing trial balance and final statements, balance sheet and profit and loss account. Types of cash book, single column, double column, discount and cash, triple column, discount, cash and bank. Petty cash book, day-to-day expenses, simple petty cash book, analytical petty cash book. Impressed cash system. At the beginning of every month, amount spent in previous month will be given to the petty cashier so that cash balance at the beginning of the period remains constant. Example, cash balance to be maintained is rupees 1000. Amount spent in September is rupees 785. So the amount given by the main cashier at the beginning of October to the petty cashier is rupees 785. The balance in petty cash book is an asset. Rules of preparing the trial balance. Balances of all assets account, expenses account, losses, drawings, cash and bank balances are placed in the debit side. Balances of all liabilities account, incomes account, profits, capital are placed in the credit side. There can be any number of subsidiary books maintained by a business entity. Commonly used are purchase day book, sales day book, purchase returns, sales returns, bills payable, bills receivable, cash book, and journal. Classification of accounts and golden rule of accounting. Personal account, debit the receiver of benefit, credit the giver of benefit. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. Cash book, single column cash book, double column cash book, triple column cash book, petty cash book. Under double column cash book, cash and discount or cash and bank. In triple column cash book, speciality about 3-column cash book, contra entries. All the 3 types of account, discount, cash and bank. Discount column is not balanced, rather totaled and transferred to ledger account. It effectively has 4 accounts: cash account, bank account, discount allowed account, discount received account. Petty cash book, normal single column cash book, impress system, analytical system.
That's it. Yes. Okay. Clear, all of you? Now, there only in your revision, go to the RTP section. Okay. Yeah, one of you tell the page number.
209.
209.
2020, 2000.
Yeah, June 2023 RTP. There you can go to now problem number 4, cash book. Problem number 4, cash book. Yes. One of you read. Yeah. quickly. One of you read the problem?
Yes, sir. Prepare a triple column cash book for the month of April 2022 from the following transactions and bring down the balance for the start of next month. Cash in hand, date, first cash in hand 9,000, first cash at bank 36,000, second paid into bank 3,000, fifth bought furniture and issued check 4,500, eighth purchased goods for cash 1,500, 12th received cash from Mrs. Kamini and deposited the same into bank 1,940. Discount allowed to her 60 rupees. 14th cash sales 15,000. 16th paid to Mrs. Sika by check 4,350. Discount received 150. 19th paid into bank 1,500. 20th sales through credit card 4,000. 23rd withdrawn from bank for private expenses 1,800. 24th received check from Mrs. Rima 4,290, allowed her discount 60. 26th deposited Mrs. Rima's check into bank. 28th withdrew cash from bank for office use 6,000. 30th paid rent by check 2,400. 30th bank charged 1% commission on sales through debit or credit card.
Yes. So, small correction. Ali adu miss. Okay. Miss Rima or Mrs. Allah. M bar S is Mrs.
Yes,
Okay.
yes, sorry.
Impact, that is the no problem. At CA foundation something new you learn. No, so now everything you will read that. First M bar S everybody was asking, what is this, sir? What is this? Now even normally human beings are reading as messages. Normally it is a person, so miss. Okay. Yes. Simple problem. Correct. Shall we start? So you open your notes book. Write down. Question 4, RTP June 2023. Okay. RTP. Question number 4. RTP June 2023. Okay. Write down triple column cash book. Everyone knows the format? Yes. We'll have date, particulars, then discount, cash and bank. Again, date, particulars, discount, cash and bank. Yes. Debit and credit on the top. Yes. Quickly draw the format, all of you. Done? Do your beautification and all later. Okay. Quickly draw. Yes. Right? First transaction now. What does it say? Cash in hand on first is rupees 9,000. Correct? So where will I write it as? Two. Yes, two balance brought down. Sorry. Yes, two balance brought down. First date is April 1st. Correct? Two balance brought down.
Discount
In-
column nil.
Discount is nil, obviously. So you write down in the cash column how much?
9,000.
Rupees 9,000. Bank column?
36,000.
Bank column 36,000. Next.
Paid into bank.
Paid into bank on 2nd April 3,000. Yes.
Bank to cash.
Bank account.
Yes. Bank to cash. So here what will I write? To
Cash.
to cash account. To cash account within bracket. See, remember, always write contra. Okay. Yes. To cash account. In which column will I write? Cash column or bank column? Bank column 3,000. Next, same thing. April 2nd. By
Cash.
By bank account.
sorry, by bank account.
In cash column 3,000.
In the cash column, write down 3,000. Next. Fifth April, bought furniture and issued check rupees 4,500. Yes, where will this come?
To bank account, bank column. To cash
To-
account, bank.
Bought furniture and issued check.
To furniture.
When I buy a furniture,
Buy furniture.
furniture is an asset. Yes, everyone. Furniture is an asset. So debit when asset is increasing. So buy furniture account to bank account because you're giving check. Clear, all of you?
Yes.
Yes. So come to the cash book and write down. Here. April 5th. Buy furniture account. In the bank column 4,500. Next. 8th April, purchase goods for cash 1,500.
Buy purchase to cash.
Correct. For cash, right? So April 8. By purchases account. In the cash column, rupees 1,500. Next. On 12th April, received cash from Miss Kamini, rupees 2,940, discount allowed to her, rupees 60. Yes, what will be the entry for this?
Cash account debit. Discount account debit to Miss Kamini.
Correct. So, write down April 12 to Miss Kamini. Discount account 60. Cash account 2940. Cash account 2940. We do one thing in the and deposit the same into bank they're written. Okay. Technically, you're actually supposed to pass a contra entry again, correct? Yes, but in the RTP answer they have not written. So either we have to change our answer or the question itself, we just scratch that out better. Okay. When you solve RTP, you will get confused. So I'm telling you in the answer, mean answer, they have not considered this cash account deposit. They have missed it. So in the question itself, my suggestion, just remove that point, deposit into bank. Clear, all of you? Adana, I'll take pity because in the answer they have not considered, it is wrong. 100% is wrong. If they've given that it is deposited into bank, you have to obviously show that it is deposited into bank. All of you understood? So questionally, I'll just scratch that out very clear. Amile, don't tell me your answer is not matching with that. If it will not match, right? So that is why simply scratch it out. But examination if they give, please you have to show that as a separate entry. All of you understood? Okay. Next.
Excuse me, sir.
Yes.
Sir, if it is deposited into the bank, what will be the entry?
What will be the entry? Yeah.
Yes, sir.
Bank
Same
account
contra
debit.
entry, ma. Bank account debit to cash account.
Again, we need to show the separate entry or the same entry to Miss Kamini.
No, that Kamini, you're receiving the cash. That is a separate transaction. Then you're depositing cash. That's a separate transaction. So you need to record again contra entries on two sides, right? One you will be crediting cash, other one you will be debiting back.
Fine, sir. Thank you.
Clear? Okay.
Sir, but the entry is a bank account debit, discount account debit to cash account, no, sir?
No, that's the net entry. Don't do net entry. That's wrong. Okay, that is wrong because discount account will come in the when you are receiving money from Kamini. That's a separate transaction, right? 2094 cash account debit 2940, discount account debit 60 to Miss Kamini rupees 3000. Clear?
Okay, sir.
That's a separate entry. Then once you have received the cash, you deposit it to bank. That's a separate entry. Understood?
Yes, sir.
Yes. All right. Now,
Sir,
next transaction 14th April cash sales of rupees 15,000.
Cash column 15,000.
Yes. 14th April. 14th April to sales account. To sales account. Cash column amount is rupees 15,000. Next. 16th April paid to Miss Shikha by check rupees 4,350 and discount received 150. Paid
By
to
Miss
Miss Shikha.
Shikha.
Yes.
By Miss Shikha, sir.
Correct. April 16th by Miss Shikha. It is what? Check is given, correct? So 4,350 and discount is
By Miss Shikha's account.
150. Discount is rupees 150. Next. April 19th paid into bank 1,500. That means bank will be debited, correct?
To cash.
Correct. To cash. To cash. In the bank column, rupees 1,500. Same thing. Again, April 19th.
By bank.
By bank account. In the cash column, 1,500. Yes. Next.
Sales to credit card.
Sales through credit card 4,000 on April 20th. To sales account. In the bank column. 4,000. Next. 23rd April withdrawn from bank for private expenses 1,800. Yes, tell me the entry for this.
By drawings account.
Excellent. Yes, by drawings account. By drawings account in the bank column. By bank column.
Withdrawn from bank.
Withdrawn from bank 1,800. Next, April 24th received check from Miss Rima 4,290, allowed a discount of rupees 60. And very important, next one you check. April 26th deposited Miss Rima's check into bank. Now, what is the difference between this transaction and the other transactions where amount is received through check?
we have received check, but we have not
Not deposited. So remember this treatment. Earlier also we have done during the normal classes. When check is received but not deposited to the bank, what do we treat it as? Cash receipt. Remember this. You treat it as a cash receipt, and then when check is deposited into the bank, you treat it as a contra entry. Remember, all of you? Yes. So whenever check is received and prompt deposit is not done, right? When there is a difference or time gap between receipt of check and deposit into bank, at that time you will treat it as a cash receipt first and then as a cash deposit. Clear, all of you? Yes, we have done this during the normal classes. So now write down April 24th, correct? That is when you have received the check. So April 24th, you treat it as a cash receipt, correct? So cash account debit to Miss Rima, okay? Yes, cash account debit to Miss Rima. So on the debit side, write down to Miss Rima. In the cash column, write down the amount.
4290.
4290, and the discount is how much?
60.
60. Next.
26th.
26th April, deposited Miss Rima's check into bank. So now we will treat it as what? Contra entry. Correct? So it is like a cash deposit. So to cash account, contra entry, in the bank column you will write down how much? Rupees 4290. And here also April 26th by
bank
account, in the cash column write down 4290. Next, April 28th, withdrew cash from bank for office use 6,000. So very simple again. It is withdrawal of cash. So you'll write down April 26th. Date is April 28th. April 28th to bank account. Contra entry. In the cash column, write down
6,000.
rupees 6,000. April 28th by cash account. In the bank column, rupees 6,000. Next, April 30th, paid rent by check.
By rent account.
By rent account. Rupees 2,400. And last one is 30th April, charged 1% commission on sale through debit per credit card. So write down April 30th by credit card commission account.
40.
Yes, it is 1% off rupees
4,000.
Rupees 40. Rupees 40. Therefore, April 30th by balance carried down. Yes. Discount column, what is the balance carried down?
150.
It's total.
It's total.
Not balance, but total, correct? Total 150 and
150. 120.
120. Okay. Now, yes, now balance the cash and bank column. Total of the debit side. Yes. 9,000 plus 2,940, 15,000, 4,290 plus 6,000.
37,000.
37,230.
37,230. Next, bank column.
48,790.
Bank column is 48,790. Therefore, balance carried down is
Sir, credit side cash book 10,000.
yes. What is the balance carried down?
26,940.
26,940 and bank column
29,700.
29,700. Total will be same. That is 37,230 and 48,790. Therefore, May 1st, to balance brought down 26,940 and 29,700. All of you done?
Yes, sir.
Yes, sir.
Okay.
Yes,
Below
sir.
the breakdown note discount allowed column and discount allowed and discount received. Discount allowed and discount received of rupees 120 and 150 should respectively be posted. Should respectively be posted to the ledger accounts. Okay. Yes. Am I audible?
Yes, sir.
Yes, sir.
Yes.
Yes. Am I audible?
Yes.
Yes, sir.
Yes. Should respectively be posted to the ledger accounts. Okay. Next. Write down. My voice is breaking.
Yes, sir.
Yes, sir.
Okay. Just 2 seconds. Generator will on. Okay. Just give me 1 minute. Okay. Till then, just tell me. I'll switch off my video. Is my voice audible now, or is it still baking?
It's audible.
Audible. Okay. Below that, write down. Okay. Below that, write down. When checks are not promptly deposited to the bank, when checks are not promptly, when checks are not promptly deposited to the bank, it is first entered in the cash column. It is first entered in the cash column and subsequently when check is deposited to the bank and subsequently when check is deposited to the bank account is debited and cash account is credited. Bank account is debited and cash account is credited. Yes. Is it still laggy?
No, sir.
No, sir.
It's fine. My video is also fine.
Yes,
Yes,
sir.
sir.
Yes, sir.
All right. Okay. Now all of you understood this problem? Simple? Yes, I just
Yes.
wanted to do one problem. Okay. So that your, it gets refreshed and very simple, right? So these kind of questions come in your examination, trust me, and then you can score full marks. Yes?
Yes, sir.
Yes, sir.
Excuse me, sir.
Yeah.
Sir, could you please show that slide one more time? I just want to see the last part.
Yeah, sure. You want to show the answer you want to see?
Yes, sir.
Yes. Is it seen?
Yes, sir.
Yeah.
So I had a small doubt. Like, why is it 120 and 150 in the discount column? Why is it not the same? Like balance?
It cannot be. We cannot balance the discount column. No, it is discount received and discount allowed. Two different ledgers. They are not the same ledger. They are not linked only. Correct. See, I have purchased goods from Gaya, okay, and I'm selling goods to Shrestha. What discount I received from Gaya? Can I expect the same discount to be given to Shrestha?
No,
Did you
sir.
understand? Both are different transactions, correct? So therefore, both are different ledgers. Okay.
Yes, sir. Thank you, sir.
Clear?
Sir, the one
Yeah,
more. I
yeah.
didn't.
You want to see? Okay, okay.
Excuse me, sir.
Yes.
Sir, if the check is deposited on the same day, it was received.
Then you can
then
take it to the bank. Then just like how we did for this, I think Shikha, right? So not Shikala. I'm not able to remember. I think
Kamini, sir. That's
Kamini, right? So we have taken it directly to the bank. Okay.
yes, sir. Sir, till then, please, can you please differentiate between simple and analytical cash books, sir? Petty cash books.
Simple is what? Simple is just one column. Okay, you have your receipts, and so in this column, now if I do not have discount and bank column, and I'm only recording for cash, the same cash book, imagine without the discount and bank column, that is my simple cash book. Is that clear?
Yes, sir.
Okay, now you are talking about petty cash book or simple cash book?
Petty cash book.
Simple petty cash book. Same way, petty cash book also, if I have instead of these major transactions, if I have petty expenses in the same format, I call it a simple petty cash book. Okay, format will be same.
Okay, sir.
Okay, I'll have one. But analytical means I'll have different columns wherein I'll have transportation, then freight charges, and your other miscellaneous expenses, repairs, this, that, all small expenses. I'll have different columns. That is called as analytical cash book.
Okay, sir. If not specified in the question, that
They will specify if it is analytical.
what we have to make.
No, they will specify if it is analytical. They will specify if it is analytical. They want you to prepare analytical petty cash book, they will specify it to be analytical petty cash book. Otherwise, you have to prepare simple one.
Okay, sir. Thank you.
Yes. Any other doubts?
So what
Okay.
is the format of analytical cash book?
Format. So you will have one receipts column, like I said, okay, and a date column you will have. Okay, then for payments you will have one total column and then respective ledger columns, just like how you have discount column, cash and bank, like that they discount columns here. Same you will have their freight and then your repairs and all those other small expenses. You will have different columns.
Okay.
Okay, one receipt column and then one total column. You will one receipts you will have particulars and then one you will have total column for all the payments. Clear?
Thank you, sir.
Yes. Okay. Any other doubts? Clear, all of you? Can we move on to the next topic then? Yes?
Yes, sir.
All right. The next one is what? Depreciation. So before I start with depreciation, that is the definition of depreciation. What is the first definition we learned when I started this chapter? If you remember, we started with property, plant and equipment. Remember, all of you?
Yes, sir.
Depreciation when I started, I always teach what is property, plant and equipment. Let us recall the definition of PPE. Okay. What is property, plant and equipment? They are tangible items. Remember that first. What? Not intangible, but tangible items. What do I mean by tangible? If I can touch and feel. Yes. If I can touch it and feel it, that is called tangible items. Yes. I can see it, I can touch it and feel it, that is tangible. Therefore, property, plant and equipment are tangible items. Yes, are tangible items that are held for use in the production or supply of goods or services or both. Yes, they are held for use for what? For production or supply of goods or services or both. Simple. That is for my normal sales. Yes, they're held for use in the production of goods or supply of goods or services or both. For rental to others. Yes, for rental to others and or for administrative purposes. Remember this definition, all of you. Yes, or for administrative purposes. I repeat, property, plant and equipment are tangible items that are held for use in the production or supply of goods or services or both, for rental to others or for administrative purposes, and are expected, very important, it is expected, it need not be actual, are expected to be used during more than a period of 12 months. Yes, are expected to be used during more than a period of 12 months. So what are the three things now? Property, plant and equipment are tangible items that are held for use in the production or supply of goods or services or both, for rental to others or for administrative purposes. All of this is my property, plant and equipment, and main thing is they are expected to be used during more than a period of 12 months. Yes, clear, all of you? Yes. Okay.
Yes, sir.
Next, we learned what is depreciation, correct? What is depreciation? Simple terms, it is a systematic allocation of depreciable amount of an asset over its useful life. Systematic allocation, not any haphazard or random allocation. It is a systematic allocation of depreciable amount of an asset over its useful life. Clear? Systematic allocation of depreciable amount of an asset over its useful life. Then we learned what is depreciable amount. Depreciable amount of an asset is the cost of an asset or other amount substituted for cost less its residual value. Remember this, historical cost minus the residual value is nothing but depreciable amount. That is what you depreciate, correct? You set aside the residual value and then whatever is the balance amount, you call it as depreciable amount. This you systematically allocate. How do you systematically allocate? By using different depreciation methods that we have learned. Yes, straight line method, WDV method, etc. Yes, this is my depreciable amount. Next, what is useful life then? Yes, what is the definition? Depreciation is a systematic allocation of depreciable amount of an asset over its useful life, where depreciable amount is the cost or other amount substituted for cost less its residual value, and useful life of an asset is the period over which an asset is expected to be available for use. Yes, it is the period over which an asset is expected to be available for use by an entity. Clear, all of you?
Yes.
Yes?
Yes, sir.
All right. Write down quickly. Write down the definition. You can give the heading as depreciation. Write down property, plant and equipment. Property, plant and equipment. Property, plant and equipment are tangible items that property, plant and equipment are tangible items that put a colon and then below that write down A, semicolon, and below that A, are held for use in the production or supply of goods or services or both, are held for use in the production or supply of goods or services or both, are held for use in the production or supply of goods or services or both, comma, for rental to others, comma, or for administrative purposes, and put a semicolon, right? And below that write down point B. Point B, are expected to be used during more than a period of 12 months. Are expected to be used during more than a period of 12 months.
Sir, can you repeat the first point?
Sure. Property, plant and equipments are tangible items that are held for use in the production or supply of goods or services or both. Aita? Are held for use in the production or supply of goods or services or both, for rental to others, or for administrative purposes. Okay? And are expected to be used during more than a period of 12 months. Done?
Yes.
Property, plant and equipment. Next, write down below that depreciation. Depreciation is the systematic allocation. Depreciation is the systematic allocation of depreciable amount of an asset over its useful life. Of depreciable amount of an asset over its useful life. Next, below that write down depreciable amount. The depreciable amount of an asset is the cost of an asset or other amount substituted for cost less its residual value. The depreciable amount of an asset is the cost of an asset or other amount substituted for cost less its residual value. Done? Next, below that write down the useful life of an asset. The useful life of an asset is the period over which an asset is expected to be available for use. An asset is expected to be available for use by an entity by an entity or the number of production units expected to be obtained from the asset by the entity.
The number of production units.
The number of production units expected to be obtained from the asset by the entity. From the asset by the entity. Clear? From the asset by the entity. Okay, that is my useful life. Very simple, you can write down. Depreciable value is equals to cost of asset minus residual value. Depreciable value is equals to cost of the asset minus residual value. Okay, next point, write down, is when does the depreciation begin? Anybody? Remember?
The product is
When it is
ready to use as intended by the man.
When it is available for use. Those are the words I taught you guys, not put to use and all. Yes, it is available for use. Remember my example. I bought a brand new Mercedes Benz. I've kept it in my garage for 3 years. I've not yet put to use. Correct? Have I put it to use? It is available for use, but I've not put it to use. So according to your definition, if it is only when it is put to use, that means for 3 years I don't have to depreciate, which is wrong. Correct? You depreciate at an asset whether you use it or not. Yes, so it should be available for use. Right now, depreciation of an asset begins. Depreciation of an asset begins Depreciation of an asset begins when it is available for use. Now, if anybody can tell me the next answer for the next question, I'll be very happy. Let me see. I've told you when an asset is said to be available for use, I should tell one long answer always. Remember?
When
yes.
When it reaches the place of the entity.
Yes. But how was I expressing it always? You're there, but how was I expressing it? Yes. When it is who's that?
Present location.
When it is in the location and condition necessary for it to be capable of operating in the manner intended by management. Yes, just imagine a CA foundation student writing an answer like this. Obviously, you will score brownie points. Yes or no? Correct? If you write an answer like this, you will definitely score brownie points. Yes, write down. That is, continue the same answer. That is, when it is in the location and condition, that is, when it is in the location and condition necessary for it to be capable of operating in the manner intended by management. In the manner intended by management. Next. Factors in measurement of depreciation. Factors in measurement of depreciation. Yes. What are the factors in the measurement of depreciation?
Cost, estimate, scrap value.
Formula. If you know the formula, you can tell. Yes. So I repeat, somebody asked me what is the depreciable value. What is the formula? Yes. So the formula is very simple. Cost of the asset minus residual value. That's all. Okay. Someone has told me to repeat it. So it is simple. Cost of the asset minus residual value. Okay. Yes. Write down factors in measurement of depreciation. Under that, number one, cost of the asset. Number one, cost of the asset. Put a hyphen and write historical cost. Historical cost. Next, number two, residual value / scrap value. Residual value bar / scrap value. Last one, number three, useful life. Yes, useful life. For this, the last 2 points, that is residual value and useful life, put a flower bracket and what will you write?
Estimated.
Estimated. Very good. Yes, both of these are estimated. Estimated. Yes. Next. All of you clear till here? Yes. Now.
Sir.
Yes, tell me. Up. Component based depreciation. Correct? Write down. Component based depreciation. Below that, write down PPE, that is property, plant and equipment. PPE to be identified as a separate component. PPE to be identified as a separate component should have both. Under that, write down point A. I repeat, PPE to be identified as a separate component should have both. Under that, point A, significant cost compared to overall cost of the item of property, plant and equipment, of the item of PPE, compared to the overall cost of the item of PPE. Clear? Next, below that, or put a semicolon and write down and point B. Next, point B. Estimated useful life or depreciation method differs from estimated useful life or depreciation method differs from the rest of the parts of the PPE. Differs from the rest of the parts of the PPE. Clear? Yes. So what are the cumulative conditions to be satisfied? First one is the cost should be significant compared to the overall cost. Remember my aircraft example, the engine cost is significant when compared to the entire aircraft cost. Yes, the useful life of the engine may be, or depreciation method of the engine may be separate when compared to the other spare parts of the aircraft. Yes, so you can go for component based accounting for an aircraft. Clear? Yes?
Yes, sir.
Yes. Next. What are the different methods of depreciation? We had learned straight line method, written down value method, and units of production method. These are the three main methods, and then you have learned other methods also. Correct? Straight line method, WDV method, and units of production method. Below that, write down methods of depreciation. Under that, write down number one. Methods of depreciation. Under that, number one, straight line method. Yes. Straight line method, what is the formula? Yes. Straight line method. Original cost minus scrap value or residual value divided by
Useful life.
useful life. Yes, write down. Straight line method formula is what? Original cost minus scrap value divided by useful life. Is original cost minus scrap value divided by useful life. Below that, write down WDV or written down value method. Written down value method. Here, write down depreciation is calculated on book value. Yes. Under SLM, it's calculated on original cost. Under WDV, it is calculated on book value. Under SLM, the amount of depreciation year on year is the same. Yes, it is constant. Under WDV, it will be reducing. Correct? Yes, write down. Depreciation is calculated on book value. Below that, write down. Depreciation under WDV method. Depreciation under WDV method decreases over the life of the asset. Over the life of the asset when repairs to the asset will increase. Correct? When repairs to the asset will increase. When repairs to the asset will increase. I repeat, depreciation under WDV method decreases over the life of the asset when the repairs of the asset will increase. Full stop and continue. Thus having a balancing charge to the P&L. Remember this point? Thus having a balancing charge. Yes, the depreciation reduces whereas the repairs increases. So the net impact on the P&L is balanced out. Yes, that's why it's called this. That is why we are saying it has a balancing charge to the P&L. All of you remember this point? Yes? Yes. Correct? So what happens is under WDV method, the depreciation keeps on decreasing year on year. But obviously, as and when the years pass on, repairs will increase. Correct? Therefore, repairs is increasing, depreciation is reducing. At the end of the day, it has a balancing charge to the P&L. Clear? That is one special point under WDV method. Next, write down journal entry. Journal entry. Yes, there are two types. Right? First one is depreciation account debit to fixed asset account. Depreciation account debit to fixed asset account. Next. Depreciation account debit to fixed asset account. Next one. Write down. Number 2. Depreciation account debit to provision for depreciation account. Yes. That means what? I will not be taking it to my fixed asset. Now, when the asset is sold, I'll be transferring the provision for depreciation account balance to my fixed asset account. Okay. For now, I will keep it in my provision for depreciation account under the liability side. When the asset is sold, that is when I take the balance to the fixed asset account. Clear? Yes. Next.
So provision for fixed asset account.
Provision for depreciation account. Okay. What type of account is this? Personal, real or nominal?
Nominal.
Yes. Not
Yes.
depreciation. Provision for depreciation account. What type of account is it?
Personal account.
Personal account. Very simple. Is it a liability or an asset or income or expense? Expense is depreciation account. Correct. Therefore, provision for depreciation has to be liability. All liabilities are personal account. Very simple. Correct. All liabilities are personal account. No confusion there. Okay. Next. Profit bar loss. Profit bar loss. Give the heading as profit/loss. If book value is less than sale value, if book value is less than sale value, what is it? Is equals to profit. Profit. If book value is more than sale value, I hope you are writing the symbol and not writing full form. If book value is more than sale value, that is greater than sale value, is equals to loss. Correct? Where book value is equals to, yes, original cost minus or less depreciation till the date of sale. Very important. Yes, it's not till the opening balance. Till the date you're selling, you need to calculate the depreciation and then subtract it from the book value and find out what is the closing book value as on the date of sale. The formula is, I repeat again, book value is equals to original cost less depreciation till the date of sale. Clear, all of you? Depreciation till the date of sale. Next. What did we learn? Change in method of depreciation. Write down the heading. Change in the method of depreciation. Change in the method of depreciation. What is it? Change in? Anybody remembers? It's a change in what? Accounting?
Estimate.
Estimate. Yes, very good. Correct. Change in the method of depreciation is what? Change in accounting estimate. Yes, write down the heading. Change in method of depreciation. Under that, write down. It is a change in accounting estimate. Therefore, what effect will I give? Prospective or retrospective? Yes. Prospective. Yes. Henceforth, I forget what has happened in the past. From now onwards, I give the effect. Correct. Therefore, write down below that prospective effect to be given. Prospective effect to be given. Clear? Prospective effect to be given. Next. Where that write down? Sum of years of digits method. Sum of years of digits method. Yes, what is the formula? Write down. Cost multiplied with number of years remaining within bracket. Anybody?
N into N plus 1 by 2.
As on first day of period.
As on the beginning of the period. Very important. Yes, very good. Yes, write down. Cost into number of years remaining within bracket as on the beginning of the period. This is for your reference, right? Normal definition doesn't have as on the beginning of the period. Okay. But I make you guys write down so that you don't get confused, right? Within bracket as on the beginning of the period divided by total sum of all digits of life of the asset. Total sum of all digits of life of the asset. Within bracket, write down. Yes, what is the formula? N into N multiplied with N open bracket, N plus 1 divided by 2. N multiplied with N plus 1 close bracket divided by 2. N into N plus 1 divided by 2. That is the formula for finding out the sum of all the digits of the life of the asset. Clear, all of you? Yes. That means what? If 5 years, if say the life of the asset is 5 years, then what is the sum of the digits of the life of the asset?
5.
15.
Correct. That is 5 into 5 plus 1, that is 6 divided by 2. That is 5 into 6, 30 divided by 2, 15. That is nothing but 5 plus 4 plus 3 plus 2 plus 1. It will add up to 15. Did you guys understand? Yes. Next. So when I say number of years remaining as on the beginning of the period, it means what? If I'm calculating depreciation for the second year, if the useful life is 5 years, if I'm calculating depreciation for the second year, that means how many years is remaining? As on the beginning of the period?
4.
4, very important. Don't do 3 minus 2. As on the beginning of the period, 4 years is remaining. Therefore, 4 years you will take. Did you understand?
Yes.
For useful life, for the second year, I'm computing the depreciation. For second year, as on the beginning of the period, how many years are remaining? 4 years. So you'll multiply into 4 by 5. Is this understood to all? First year it will be 5 by 5. Second year it will be 5 by 15. Second year it will be 4 by 15, then 3 by 15, then 2 by 15, and then 1 by 15. Everybody understood? Yes, this is the
Yes, sir.
sum of digits of years method. Next, machine hour rate. Machine hour rate. Right? Write down. Total depreciation is allocated. Total depreciation is allocated among the total productive hours of the machine. Among the total productive hours of the machine. Below that, write down. Next point, in place of estimated life, estimated total hours, the machine would work will be considered. Estimated total hours, the machine would work will be considered. Clear? Next. Very simple, yes. So what we do is, here is machine hours. So total machine hours, the machine is expected to run for the entire life. That will be the denominator. In the current year, how many hours the machine has run, that will be multiplied. Very simple. All of you understood this point? Yes? Yes. Okay. Next. Production units method. Production units method. Total depreciation is allocated among the total number of units to be produced. Total depreciation is allocated among the total number of units to be produced. Below that, write down. Therefore, depreciation in a year depends on the units produced during that year. Therefore, depreciation in a year depends on the units produced during that year. Clear, all of you? Yes, here very simple again. What we considered, the denominator will be total number of units expected to be produced from the machine. Okay. Multiplied with number of units produced during that year. Simple? Yes? Alright. Next. Depletion method. Write down. This method is employed in case of natural resources like minerals, forest, granite quarries, etc. Clear? Minerals, forest, granite quarries, etc. Below that, write down. Total depreciation is allocated among total natural resources. Total depreciation is allocated among total natural resources. Next point. Depreciation in a year depends on the natural resources extracted. All of you remember the example I given in the class? Yes, a mining query is given. Yes, mining query is there, wherein let's say it has 1 lakh kg of natural resources, correct? During this year, during the first year, you have extracted 20,000 kgs. Then depreciation will be what? Whatever is the cost or lease amount of the query divided by 1 lakh multiplied with 20,000. That is divided by the total natural resources multiplied with whatever is extracted during that year. Clear? Yes? All of you understood? Okay. Next. Revision of estimated useful life. Yes, what is this again? Change in
Accounting estimate.
Again, write down number 1. Change in accounting estimate. Put a hyphen and write prospective effect. change in accounting estimate, put a hyphen and write prospective effect. Below that, write down total depreciation, remaining depreciable amount to be charged over the remaining depreciable amount to be charged over the revised remaining estimated useful life. Total depreciation to be charged, total depreciable amount to be charged over the revised remaining estimated useful life. Clear? What is depreciable amount? Cost minus residual value. Yes. That is remaining depreciable amount. Whatever is depreciated, that you will not consider. Remaining depreciable amount, whatever is there as on the date of revision, you will divide it by the revised estimated useful life. Is this clear to all of you? Yes. Next. Okay. So this one I will just discuss whatever we have learned. Okay. That chart I'm not going to dictate again. The chart was dictated during the normal class. You have to refer the same chart. Okay. Yes. That is what? Revaluation of property, plant and equipment. Yes. What? There are two kinds of revaluation. What do I mean by revaluation? Initially, what did I say? It is recorded at the historical cost. Yes. Now, there could be a case of upward or downward revaluation of the asset. Okay. In case of upward revaluation, and first time it is happening, right? Upward revaluation. That means what? Asset value is increasing, correct? Asset value is increasing. That means earlier you had a different value, now you are having an increased value of the asset. Yes. So what will you debit? Always whenever asset is increasing, you will debit the asset account. Clear? Asset is debited. What will you credit? I told you prudence concept. What is prudence concept? Anybody? Yes, Rakshita, what is prudence concept? Yes. Account for the anticipated expenses and losses, but don't account for the anticipated incomes and gains. Your crediting P&L means it's a anticipated income. Therefore, we say do not credit P&L account, rather credit what? Revaluation reserve account. Remember this? Yes. So you debit asset account and you credit revaluation reserve account. This is for first time increase. Yes. Next, if it's a downward revaluation, then by prudence concept, what does it say? Account for anticipated expenses and losses. So downward means asset value is reducing. You credit asset account and you debit P&L account. Clear? First time upward revaluation, it will be asset account debit to revaluation reserve account. For downward revaluation, P&L account debit to asset account. Clear? Next, subsequent upward revaluation. That means what? Earlier it was downward, but now it is upward. Yes, earlier downward, Pratiksha, now it is upward. Then what will we do? To the extent of earlier downward revaluation, you will credit the profit and loss account. Yes, because you debited P&L earlier, you will credit P&L now to the extent of earlier downward revaluation. Balance revaluation, if any, will be credited to revaluation reserve account. Is this understood? Same way, in case of subsequent downward revaluation and earlier upward revaluation, to the extent of earlier upward revaluation, you will debit revaluation reserve account. Balance, if any, will be debited to P&L account. Everybody remembers this now? Yes? Okay. Now, take a 10 minutes break. It is 8, almost 8:05 now. 8:15, all of you come back and then we'll solve problems on depreciation. Okay? Sharp 8:15, you should be back with your cameras on. Okay? Don't, expect me to come and then start telling you to cameras on. By 8:15, sharp 8:15, your camera should be on. So come back by 8:14 itself. Okay? Bye, all of you. Yes. Full relaxed. Come back, all of you. Okay, all of you back? Yes. Let us go through the RTP question first, and then I'll just quickly glance through the revision material also. Okay. Yeah. RTP question, page number is 212, I guess. Not 212, sorry. It is 200 something. Okay. Yes. Concept and accounting of depreciation, problem number 7. Let's check. Concept and accounting of depreciation, question 7. Yes. One of you read the problem quickly.
So may I?
Yeah, anybody. Fast.
A plant and machinery costing 10 lakhs is depreciated on straight line, assuming 10-year working life and zero residual value for 4 years. At the end of 4th year, the machinery was revalued upwards by 40,000. The remaining useful life was reassessed at 8th year. Calculate depreciation for the 5th year.
Okay. So see, this is what change in what? The machinery was valued upwards, right? That means the value, change in estimated value, correct? Change in the value is also a change in accounting estimate. So the effect should be given prospectively. Yes. So whatever has happened till now, you forget, right? Henceforth, to give a prospective effect, right? What will we do now? So for that, we need to find out what is the remaining depreciable amount as on the date of revaluation, and then you revalue it upward by 40,000, and then find out what is the depreciation amount for the 5th year, right? Okay, now do it. Write down question 7 of RTP June 2023. Question 7 of RTP June 2023. So write down calculation of depreciation for the 5th year. Calculation of depreciation for the 5th year. So first, what will we find out? What is the WDV of the asset at the end of the 4th year? We have to find out, correct? Yes. So write down depreciation. It is a straight line method of depreciation. Yes. So depreciation per year charged for the first 4 years. Depreciation per year charged for the first 4 years is equals to. Yes, what is the cost of the asset? Rupees 10 lakh. Rupees 10 lakh minus 0, that is 0 residual value, divided by 10 years. Rupees 10 lakh minus 0 divided by 10 years, which is equals to rupees 1 lakh.
1 lakh.
Rupees 1 lakh. Next, below that, write down WDV of the machine. WDV of the machinery at the end of 4th year is equals to. WDV of the machinery at the end of 4th year is equals to. Yes, 10 lakh minus open brackets 1 lakh multiplied with 4, correct? 1 lakh is the depreciation amount. For 4 years it is charged. So 10 lakh minus open bracket 1 lakh into 4 close bracket is equals to rupees
6 lakh.
6 lakh. Down is equals to rupees 6 lakh. Is equals to rupees 6 lakh. Done. Next. Therefore, depreciable amount after upward revaluation. Depreciable amount after upward revaluation is equals to rupees 6 lakh plus 40,000, which is equals to rupees 6 lakh 40,000. Which is equals to rupees 6 lakh 40,000. Now, what have I told now? The remaining useful life after reassessment is equals to how many years?
8 years.
8 years. Remaining useful life after reassessment is equals to 8 years. Below that. Therefore, depreciation for the 5th year and onwards, is equals to 6 lakh 40,000 divided by 8. 6 lakh 40,000 divided by 8, which is equals to rupees
80,000.
80,000. Equals to rupees 80,000. Done. Which is equals to rupees 80,000. Okay, next. This answer is clear to all of you?
Yes,
Simple
sir.
problem? Yes, very simple. Okay. Now, come back to your problem section. Page number 71 of your revision material. I'll just, some of the problems I'll just glance through, some we will solve. Okay. Yes. Or if you can see the screen.
Yes, sir.
Yes. Write down. So, sorry, I'll read. Right, what does it say? Messrs. Krishna took lease of a quarry. Right? This is what will you use? Depletion method, correct? Took lease of a quarry on 1st Jan 2019 for rupees 6 crores. As per technical estimate, the total quantity of mineral deposit is 12 lakh tons. Therefore, 6 crores divided by 12 lakh you will do. Okay. Depreciation was charged on the basis of depletion method. Extraction pattern is given in the following table. Year, quantity and mineral extracted. First year 12,000, then 60,000, then 90,000. So what will we do? 6 lakh divided by 12 lakh into 12,000 into 60,000 into 90,000. Correct? Yes. Required, show the quarry lease account and depreciation account for each year from 2019 to 2021. Let us look at the answer. Yes, quarry lease account. What will we say? First one you purchase for 6 crores, correct? So to bank account 6 crores. Clear? Next, by depreciation account, like I said, 6 crores divided by 12 lakh into 12,000, it is 6 lakhs. Okay. Then balance carried on 5 lakh 94,000. Then again, by depreciation account, how did you get 30 lakh? Yes. What is the amount here? Here it is 60,000.
60,000.
Correct? So, 6 lakh divided by 12 lakh into
12 lakh.
60,000 tons. 30 lakh. Clear? Same way you do it for the next year, that is 45 lakh. That is what? 6 lakh divided by 12 lakh into 6 crores divided by 12 lakh into 90,000. Clear all of you? You get 45 lakh. The same way you continue. Okay. Depreciation account, very simple. To quarry lease account, you post it here, right? That is what? First year it is 6 lakh, then 30 lakh, then 45 lakh. You post it here 6, 30 and 45, and you obviously will not balance depreciation because it is a which account? Nominal account. You transfer it to profit and loss account. Clear all of you? Everyone understood this problem? Simple? Yes? Next.
Yes.
This is the first problem I would have solved in your depreciation class. Okay. Messrs. Similar type. Messrs. Dayal Transport Company purchased 10 trucks at rupees 50 lakh each on 1st July 2017. Okay. On 1st October 2019, one of the trucks is involved in an accident and is completely destroyed, and 35 lakh is received from the insurance in full settlement. On the same date, another truck is purchased by the company for the sum of 60 lakh. The company writes off 20% of the original cost per annum. The company observes the calendar year as its financial year. Give the motor truck account for the 2 years ending 31st December 2020. Okay. So that means what? We will have to first calculate what is the opening balance. 2 years means what? Which year? We will do it for 2019-20. 2019 and 2020, correct? All of you, did you understand? You prepare the account for 2019 and 2020 to 2 years ending 31st December 2020. Remember, what did I tell you? Whenever you're solving depreciation problems, first one, observe what is the method of depreciation. What is the method of depreciation here? Of the original cost per annum. That means what?
Straight line method.
Straight line method.
Next, what is the period for which it is prepared for 2 years for the period 2019 and 2020? Clear all of you? But asset was purchased in the year 2017. That means what? First step is I have to calculate what is the opening WDV. Correct? I have to calculate what is the opening WDV. That is what is done here. Okay, write down. Open a notebook, working note. Give the problem reference. Yes, page number 71 of your CAPS material revision problem. Okay. Sorry, question page number 72. January 2021 examination question. Jan 2021. For that you write down working note. Computation of profit on settlement of truck. Profit on settlement of truck. Write down. Original cost as on 1st July 2017. Original cost as on 1st July 2017. Rupees
50 lakh.
50 lakh. Rupees 50 lakh. Less. Depreciation for 2017 within bracket how many months?
6 months.
6 months.
6 months.
Yes, show the computation now. That is what? 50 lakh into what is the depreciation percentage?
20%.
20% into 6 by 12.
By
So
12.
10%. That is 10%. So it is 5 lakh. 5 lakh. Yes. 50 lakh into 20% into 6 by 12. That is 5 lakh. Therefore, WDV is 50 minus 5 lakh, 45 lakh. Yes, 45 lakh less. Depreciation for 2018. Depreciation for 2018. How many? What is it? 35 lakh into? Yes, tell me.
50 lakh into 20%.
50 lakh. Original cost, straight line method. Very important, right? Write down 50 lakh into 20%. That is 10 lakh. Show the computation, all of you. Write down within bracket 50 lakh into 20% close bracket. And then write down rupees 10 lakh. Clear? So 45 minus 10 lakh, rupees 35 lakh. Next. In 2019, right? When is it sold? On 1st October 2019 it is sold. Correct? That is after how many months?
9 months.
9 months. So we should compute the depreciation for 9 months first. Correct? Write down less depreciation for 9 months. Less depreciation for 9 months within bracket. Yes. 50 lakh into 20% into 9 by 12. Into 9 by 12. That is how much?
7 lakh 50.
7 lakh 50,000. 7 lakh 50,000. Therefore, closing WDV is 27 lakh 50,000. Correct? 35 minus 7.5 is 27.5 lakhs. 27 lakh 50,000. Now, what is the insurance settlement we received?
35 lakh.
35 lakh. Therefore, write down less amount received from insurance company. Less amount received from insurance company rupees 35 lakh. Therefore, profit on settlement of truck is equals to, yes,
7.5.
7 lakh
7 lakh 50,000. 7 lakh 50,000. Next, working note number 2. Computation of opening WDV for 2019. That is 1st Jan 2019. Correct? Computation of opening WDV as on 1st Jan 2019. Write down WDV of the truck. WDV of the truck as on of one truck. Sorry, WDV of one truck as on 31st December 2018. Within bracket, write down working note number 1. How much is it?
10 lakh.
35 lakh.
35 lakh.
Yes, write down 35 lakh. as on 31st December 2018, guys. Okay. Okay. As on 31st December 2018 is 35 lakh. Therefore, WDV of Trent Trucks as on 1st January 2019 is 35 lakh into 10, that is 3 crore 50 lakhs. 3 crore 50 lakhs. All of you done till here? Yes, rupees 3 crore 50 lakhs. Next. Number 4. Or working on number 3. Calculation of depreciation for 2019 and 2020. Calculation of depreciation for 2019 and 2020. Okay. Now, first, Roman number 1, 2019. First, let us calculate for 2019. Thus, in 2019, there is a truck which is sold. For that, we will not compute now. Okay. And there's a truck which is purchased. For that also, we will compute separately. Okay. So, on 9 trucks, depreciation on 9 trucks is equals to 50 lakh into 9 into 20%. Depreciation on 9 trucks is equal to 50 lakh into 9 into 20%, that is 9 lakh, correct?
90 lakh.
Sorry, 90 lakh. 90 lakh. 90 lakh. Done. Next. On new truck, depreciation on new truck is equals to, yes, it is purchased at what cost?
60 lakh.
60 lakhs.
So 60 lakh into 20% into 3 by 12. 60 lakh into 20% into 3 by 12, which is equals to
3 lakh.
3 lakh. 3 lakh. Okay. Next. Depreciation on the asset sold is already calculated. So anyway, you can write down depreciation on asset sold. No, don't add it here because that will be a separate entry we'll do. Here, just add these two now. Okay. Therefore, depreciation for 2019 excluding depreciation on asset sold. Write down completely. Depreciation for 2019 excluding depreciation on asset sold is equals to 90 lakh plus 3 lakh, which is equals to 93 lakh. 93 lakh. Done?
Yes, sir.
Next. Depreciation for 2020. Depreciation for 2020. First one on 9 trucks. On 9 trucks, it is same. That is 50 lakh into 9 into 20%, which is equals to rupees 90 lakh. On 9 trucks, it is same. 50 into 9 into 20%, that is 90 lakh. Done. Next. On the new truck, now you will calculate for the whole year. Last time you calculated only for 3 months. 60 lakh into 20%. 60 lakh into 20%, which is equal to rupees 12 lakh. 12 lakh. So therefore, total depreciation for 2020 is equals to
02 lakh.
102 lakhs. 1 crore 2 lakhs. 102 lakhs. Clear? Yes. Now let us. So your homework is you have to prepare the ledger account. Can you guys do that? Yes.
Yes, sir.
Yes. And anyway, go through the screen here. Yes, all of you look here. So 2019 to balance brought down 35 lakh. We have computed here, right? Within bracket to write down working note number 2, correct? 3 crore 50 lakhs. Working note number 2. Next, we have to calculate by bank account 35 lakh, that is insurance amount. Okay. Next, depreciation on loss of on the lost asset, it is 7,50,000. Here write down working note number 1. Yes, write down in your books. Yes. I hope you guys have the printout. Always keep, okay? Yes. Otherwise, in your notebook, you make a note of it. Here you have to write down working note number 1. This is 35 lakh and then 7 lakh 50. And then here profit on settlement of truck. Here the working note number reference is given again 7.5 lakh. Okay. Next. 31st December by depreciation account working note number 3 93 lakh. Right. Then asset is purchased for 60 lakh. Balance carried down is 2 crore 82 lakhs. Next period again by depreciation account working note number 3 102 lakh. Balance carried down 180 lakh. Everybody understood this? Yes. Oh, here this is wrong. Okay, this is wrong. Correct this. I think original cost is fine. 2017. This one you make it 2018. Here this is wrong. Make it 2018. Okay. Here again make this 2019. This is 2019. Here again this is 2018 and this is 2019. Again here 2019 and 2020 both will change. 2019 and 2020. Make this as 2019. And here make it 2020. Arthaita? 1 year you have to change. Done? Okay. Then discuss the factors taken into consideration for what are the factors? 3 factors. Remember the equation. One is the cost, then the estimated useful life and estimated scrap value. Other bucket, it is theory is there. Okay. Go through it. Okay. Next. There's another similar kind of problem here. Okay, you remember this machinery 1, 2, 3 machineries. I had done this similar type of problem in the class, if you remember. Machinery, machinery 1, 2, 3, and then we calculated what is the written down value. There's a change in the method of depreciation. First, it will be, I think, the SLM to WDV or WDV to SLM. Yes, similar kind of problem we have done in the class. Okay, go through it. Okay.
Excuse me, sir.
Yes.
Sir, why we have written as asset sold, sir? It was destroyed, no, sir. Accident.
Which one?
The previous sum, sir. Track 1.
Where? Sorry, I didn't get you. Here. On lost asset.
You said depreciation on asset sold. It was destroyed, no, sir.
No, not asset sold. Sorry, depreciation on lost asset. I dictated as asset sold, is it?
Yes, sir.
Dictate. I'll working note only. I dictated like that.
Yes, sir.
No, not asset sold. On depreciation on excluding depreciation on lost asset. Sorry, I correct myself. Okay, make it as excluding depreciation on. That is where I dictated, right? For 2019, I told excluding depreciation on. I told asset sold, not asset sold. It is lost asset. Sorry. I stand corrected. Thank you. Okay. Next. A plant and machinery costing 10 lakh is depreciated on SLM basis for 10-year working life and 0 residual value for 4 years. At the end of the 4th year, machinery was revalued upward. Similar problem we solved just now. Yes. Yes. So same thing it is. Okay. Next. That's it. Okay. All right. Anyone has any doubts in depreciation? Clear? Yes. Simple, right? All right. Next one, that is topic is very simple, but you guys make it complicated. Yado, average due date and account current. Correct? Topic is the simplest of all, but you guys will make it complicated and lose marks. Either full marks you will get or 0 marks. Why? Because you will not calculate properly and you will not practice. Your average due date easy, account current easy. So everything is easy, so you don't practice and then you will lose marks. Pakka. Practice madi, you can score out in this. Okay? Yes. So what do I mean by average due date? Instead of paying and receiving on multiple dates, correct? I can have purchases and sales done on a daily basis with the same party, correct? I can sell goods to him. I can purchase goods from him. All of you there and understanding? Yes or no?
Yes, sir.
Yes,
Yes,
sir.
sir.
So I can
Yes,
sell
sir.
goods to the same party. I can purchase goods from the same party for different credit periods on different dates. Correct? Now, instead of paying all of this on different multiple dates, what I can do is I can find out what is the average due date for all the transactions and pay on that particular date in such a way that there is no loss to either party. This is called as average due date. That means what? It is the equated date on which total payments may be made in lieu of different payments on different dates without any loss to either party. Correct? Without any loss to either party. Yes, write down average due date. Average due date. Write down the definition. Average due date is the equated date on which average due date is the equated date on which total payment may be made in lieu of different payments on different dates without any loss to either party. Yes, without any loss to either party. Clear, all of you? Yes, here what did we do? We found out we have to find out we have to ascertain a base date first, correct? So before doing the base date, what do we do? For all the transactions we arrive, what is the due date? Remember, we find out what is the due date. When I'm arriving at the due date, what I do? I exclude either the date of the transaction or the due date. Yes, when I'm adding the number of days. Remember, all of you, one of the things has to be excluded. So ascertain the due date for each transaction. After that, you decide a base date. Base date can be any date. If nothing is specifically given in the question, then we normally take due date of the first transaction. Yes. Or if there are multiple due dates, which is same, correct? For multiple transactions, if the due date is same, then the due date which is repeated the most, we take that as the base date because calculation becomes simple. Remember? Yes?
Yes, sir.
Next. Once the base date is decided, then we compute the number of days between the actual due date and the base date. After that, you find out the product between this number of days and the amount. Yes. Then we apply the formula. Average due date is equals to base date plus or minus sum of products by sum of amounts. This formula you write down. Average due date is equals to plus or minus within bracket sum of products divided by sum of amounts. Base date plus sum of products by sum of amount. Done? Yes. Now, how do I ascertain the due date? Yes. If it is payable on a specific date, then what is the due date? Payable on a specific date. Then due date is such specific date. Correct? Very simple. Question says the due date is 14th of August, then due date will be 14th of August only. You don't have to apply your brains there. Very simple. If the question says it is payable after X months, then date on which such X months expires. Correct? Date on which such X months expires, wherein, what did I say? If it is very simple, if it is 1st April 2022 or 1st April 2023, and if the credit period is say 2 months, then what will I do? To the number of months, just add. It was 4, then add 2 and make it 6. Simple. Yes. So 1st April 2023 becomes 1st June 2023. Clear? Here you don't consider the number of days. To the months, you add number of months. Very simple. All of you understood? Yes. If it is payable after X days, yes, then period when such X days expires. Correct? If 1st April 2023 is the date of transaction, if the credit period is 30 days, then your due date will be 1st April 2023 and 30 days. Due date is, yes, Ashwini?
1st May.
Because you exclude the date of transaction and then add 30 days, obviously you have to include 1st May. All of you understood?
Yes.
Yes, this is how we compute the average, the due date. If due date falls on a public holiday, then
Preceding working day.
preceding working day. If due date falls on an emergency holiday or due to unforeseen circumstances, then
The next working day.
Working day.
Working day.
for bills of exchange, due date shall include
Plus 3 grace
Three
days.
grace days.
Plus 3 grace days.
3 instances. Yes. Okay. All right. Next, another thing is when amount is repaid in equal installments. Remember this? When amount is repaid in equal installments. Average due date, what did I say? You cannot compute based on number of days. Can I do a simple average? Number of days, what is there? No. We can give weightage to the number of days as well as the amount, correct? But in equated installment, what happens? Amount is the same, correct? Therefore, can I find out average due date using simple average? The answer is yes. So therefore, write down when amount is repaid in equal installments, average due date is equals to date of loan plus date of loan plus sum of period from the date of loan divided by number of installments. Sum of period from the date of loan divided by number of installments. That means what? You find out what is the period for each repayment, correct? From the date of loan till the date of repayment, for the first installment, second installment, third installment, add all of this and then you divide it by the number of installments. That is the simple average you're finding out. That when you add it to the date of loan, that is my average rate. Remember, clear? All of you? Yes.
Yes, sir.
Next. When there is both bills payable as well as receivable. Write down. In the case of bills payable and receivable with the same party. In case of bills payable and receivable with the same party, then average due date, that is ADD, is equals to average due date is equals to base date plus difference in sum of products divided by difference in sum of amounts. Correct? Difference in the sum of products. Yes. What happened? Difference in the sum of products divided by difference in sum of amounts. Clear? Yes. Yeah. Open the theory part of in your revision material. What is the page number?
41.
Page 41. Average due date. Yes, one of you read. Yeah, anybody, quick.
Average due date is the equated date on which total payment may be made in lieu of different payments on different dates without any loss to either party. Steps in computation of average due date. Ascertain the due date of each transaction. Decide a base date, zero date. Generally, the earliest due date is considered as the base date. Compute number of days between actual due date and base date. Obtain products of each transaction. Product is equal to number of days into amount. Average due date is equal to base date plus or minus sum of products divided by sum of amounts. Ascertainment of due date. If payable on a specific date, such specified date, example, if payment date is given as 15th April 2021, then that date is due date. If payment after X months, then date on which X months expire. Example, if invoice date is 1st April 2021 and credit period is 2 months, then the due date is 1st June 2021. If payment after X days, then date on which such X days expire. Example, if invoice date is 1st April 2021, the credit period is 30 days, then due date is 1st May 2021. If due date falls on a public holiday, then the preceding working day. If due date falls on a day which is a holiday due to some unforeseen or emergency circumstances, strike, band, then the next working day. For bills of exchange, the due date shall include 3 days of grace days. Where amount is repaid in installments, this is applicable when amount is lent in one installment and repayment happens in various installments. Steps: calculate number of days or months or years from the date of lending money to the date of repayment. Step 2, find total of such number of days or months or years. Step 3, average due date is equal to date of loan plus sum of step 2 divided by number of installments.
Okay. Yes. All right. Let's check the RTP problem. Yes, page number. Yeah. This page number 209 something. Okay. June 2023 RTP.
Question level.
Question 11. Yes. Question 11. Average due date. Average due date. Yes, one of read.
A accepted the following bills drawn by B on 8 March 2022, rupees 60,000 for 4 months. On 16th March 2022, rupees 20,000 for 3 months. On 7th April 2022, rupees 24,000 for 5 months. On 17th May 2022, 20,000 for 3 months. He wants to pay all the bills on a single day. Find out this date. Interest is charged at 80% per annum. And A wants to save rupees 628 by way of interest. Calculate the date on which he has to effect the payment to save interest of rupees 628.
628. Okay. Yes. Yes, write down. Question number 11. June RTP. Question 11A. June RTP. June 23 RTP. Average due date. Average due date problem. Yes. Now, base date. What shall we assume the base date? Okay. Let us first do the normal table and then we'll see. Okay, write down. Yes. Table will consist of how many columns? Remember, first one, transaction date, correct? You'll have your transaction date, then you'll have the credit period, and then you'll have the due date. Remember, transaction date, credit period, due date, amount, number of days, and product. Write down. Right, credit period is optional, right? If you want, you can write. Otherwise, directly you can add and write down the due date. Write down transaction date, and then due date. After that, amount. Yes, column headings these are, right? Transaction date, then due date, amount, number of days, and product. 5 columns, transaction date, then due date, amount, number of days, product. I repeat, transaction date is the first column. Second column is the due date. Third is amount. Then number of days. After that, product. Done? Now, first transaction date, quickly copy from the question. Yes, 8th March 2022. Next one, 16th March 2022. Then 7th April 2022. After that, 17th May 2022. Done? 8th March, 16th March, 7th April, and 17th May 2022. All of you done till here?
Yes, sir.
Everyone done?
Yes.
Yes. Now, in the due date column, for the first transaction, what is the credit period given? It is for 4 months.
4 months.
Yes. What did I tell? Simply add 4 months to the number of months first. 8th March 2022 will become, yes,
8 July.
July.
11th July.
July 2020.
7th July.
11th July. Why? Because it is bills of exchange. 3 grace days has to be given. So 8 plus 3, 11. Dot 4 you add 3, July 2022. First one due date is 11th July 2022. Done? 11th July 2022. Next one. 16th March 2022 becomes
19th
19th
June 2020.
June 2022 because credit period is 3 months.
3 months.
June 2022. Next, 7th April 2022 will become
10th
10th
September.
September 2020.
September because 5 months, 4 plus 5, 9. Okay. 10th September 2022. Everybody understanding? Anybody is not understanding, please raise your hand. I will clarify. Don't worry. Okay. Yes, Vinay, understanding? Yes, write down. Next one. 17th May 2022 will become
28th August 2020.
20th 20.8 20th August 2022. Right? 17 plus 3 is 20. May 5 months. So 3 is the credit period. Add 3, 8. I repeat all the due dates. First one is 11th July 2022. Next one is 19th June 2022. Yes. After that, 10th September 2022. And last one is 20th August 2022. All of you done till here? Yes. Now let us calculate the number of days. First, before number of days, which date shall we assume as the base date?
19th June.
19th June.
Yes. Normally, what do I say? What if nothing is given, then assume the first transaction due date as the base date, correct? But in this case, if you observe, first transaction due date is not the earliest due date, right? Then what will happen? Then you'll have minus and all that. Are you understanding? Yes. If it is not the earliest due date, then you have to go back. So it will be minus then plus. To avoid confusion, what we will do, we'll assume the earliest due date. What is the earliest due date? 19th June. Okay. Yes, 19th June. So write down base date is equals to 19th June 2022. Base date is equals to 19th June 2022. Done? Now in your rough work, you will calculate the number of days. Okay. Rough work. Right? Number of days for the first transaction, 11th July 2022. So there, for that you write down June month, how many days? 30 minus
19.
19 is
11 days.
11 days. Next, it is still 11th July. So in July, it is 11 days. June 11 days, July 11 days, total 22 days. Everybody understood? You exclude
Yes,
19.
sir.
Correct. You exclude 19. So you minus 19 from 30 days. So 30 minus 19, 11 days. plus 11 days in June because you include the due date, correct? So it becomes 22 days. So in the number of days column, write down 22. All of you done? Next transaction, 19th June, what will be the number of days?
0.
0. Write down 0. Next, 10th September 2022, again write down. June is how many days? 11. That will not change. July, 31 days. Next, August, 31 days. September, 10 days. 11 plus 31 plus 31 plus 10.
83 days.
83 days. Write down. Number of days, 83 days. 83 days. Done. Next, 20th August 2022. So again go same way. June is 11 days. July 31 days. August 20 days.
62 days.
Write down number of days is 62 days. Done all of you. So number of days is 22, 0, 83 and 62. All of you done? Yes, now find out the product. For the first one, 16,000 into 22.
3,25,000.
3,52,000. Everybody with me? Yes. All of you are understanding?
Yes, sir.
First one, 3,52,000. Next, 0. Next one, write down 0. Next, 83 days. So 83 into 24,000.
19,92,000.
19,92,000. 19,92,000. And last one is 20,000 into 62.
12,40,000.
12,40,000.
12,40,000. Write down 12,40,000. All of you done? Yes. Add now. Add all the things. 3,52,000 plus 19,92,000 plus 12,40,000.
35,84,000.
5,84,000. Write down 35,84,000. Therefore, below that write down average due date is equals to what is the formula? Base date plus
sum
of products by sum of
amounts.
base date plus sum of products by sum of amounts, which is equals to base date is 19th June 2022 plus 35,84,000 divided by, yes, have you total the amount column? 16,000 plus 20,000 plus 24,000 plus 20,000. Add all of it.
80,000.
80,000. 80,000. So 35,84,000 divided by 80,000. How many days?
44.8.
How many?
44.8.
44.8. So round it off to 45 days. Correct? 44.8 rounded off to 45 days. 45 days. Now from 19 June 22, you will add 45 days. Correct? Yes. So June, how many days?
11.
11. 11 plus. Then July 31. Correct?
31.
Then. So already 11 plus 31, 42 is already done.
Yes,
Therefore,
third.
therefore, how many are left? Only
3 days.
3 days.
correct. So therefore, due date is
3rd August.
3rd August 2022. Yes, 3rd August 2022. How do you do this in computation? Rough work you will do 45 days less. 45 days less. June 11 days. July 31 days. Balance is 3 days. So 3rd August 2022. Clear? 3rd August 2022. Now till here everybody understood. Now let us read the question. He wants to pay all the bills on a single day. Find out this date. Interest is charged at 18% per annum and A wants to save 628 by way of interest. Now tell me, how can you save by way of interest?
By paying early.
By paying early, correct? Remember, what is the concept of average due date? If I pay later, I have to pay interest. If I pay earlier, I save interest, correct? There is nothing but a discount or rebate is given. So same way, he wants to earn rupees 628 by way of interest. That means he wants a discount of rupees 628. They are asking, how do we compute this? On which date, if he pays, he will earn 628. Did you understand? Let us compute this. Very simple. Write down. Interest is equals to total amount multiplied with, write down the formula. Interest is equals to total amount multiplied with rate of interest divided by 365 days into number of days, correct? Divided by 365 days into number of days. Now let us substitute. Interest, do we know? Rupees 628. Write down. Rupees 628, which is equals to, what is the amount?
80,000.
80,000.
Correct sum of the amount, that is rupees 80,000. Write down. 80,000. Rupees 80,000. Then next. 80,000 multiplied with interest rate is 18%, correct? Into 18% multiplied with number of days we don't know. Call it as X days divided by 365. All of you understood? Now can we solve for X? Yes. So write down below that 628 is equals to 80,000 into 18% is how much?
14,400.
14,400 multiplied with X divided by 365. Into X divided by 365. Now multiply 365 days into
628.
Sorry, 628. 365 into 628 divided by
29,220.
divided by 14,400, which is equals to X is how much?
15.91.
15.91.
15.91 days, or rounded off to 16 days, correct? Rounded off to 16 days. Therefore, now how will we arrive at it? You write down rougher. 16 minus August, you will minus 3 days, correct? 3rd August is the due date. 16 minus August, 3 days. Balance is how much? 13 days. So in July, you will minus 31 minus 13. 31 minus 13.
18.
18 days. Therefore, if A wants to save rupees 628 by way of interest, if A wants to save rupees 628 by way of interest, he should prepone the payment. By 16 days from average due date. By 16 days from average due date. Therefore, stop and continue. Therefore, he should make the payment on 18th July 2022. Therefore, he should make the payment on 18th July 2022. Clear, all of you?
Yes, sir.
Yes. Let us go to the revision problems. Yes. Page number?
$96.
96. Okay. Page number 96 of your revision material. Yes, average due date problems. Okay, I'll go through the problems. Yes, Rakshita. What does it say? Mr. Grow and Mr. Green have the following mutual dealings. They decide to settle their accounts on the average due date, purchased and sales. So both are given here. Purchase is given as well as sales is given. You are asked to ascertain the average due date, taking the base date as 6th January 2021. So your life is simple. Why they have given 6th January? Because it is a common under both. Correct? Remember this? Easier for us. Right?
Sir.
Now let us look at the answer. Taking 6th January as the base date. Very simple. Due date they have given for gross payments 2021 and Green's payment 6th January, 2nd February, 31st March. Right? When the credit period is not given, the date of transaction is assumed to be the due date. Correct?
Yes, sir.
Right? So 6th January, respective due dates are taken, amount is taken, number of days from 6th Jan is taken, and then product is found out. Did everybody understand this part?
Yes, sir.
Clear? So respective products you have to find out for Grow as well as Green. Okay. Then excess of gross product over Greens. Right? What is that? 24 lakh 36 minus 18 lakh 53, 5 lakh 83,000. Same way between amounts also. 1 lakh 8 minus 95, 13,000. So number of days from base date to the date of settlement is how much? 5 lakh 83 divided by 13,000. That is 45 days approx. This 45 days, they need to add it to 6th January. That will be 20th February 2021. And Green has to pay 13,000 to settle the account. ಅರ್ಥ ಆಯ್ತಾ ಇದು? Yes. Everybody understood this problem? Obviously, you have to solve it. Okay. But did you understand? Anyone has any doubts in this? Simple?
No, sir.
Okay. Next. Akash had the following bills receivable and bills payable. Same concept. Yes. Bills receivable and bills payable. We will prepare two separate tables. One for bills receivable, one for bill payable. Find out the product. Find out the difference in the product, difference in the amount. Divide it and add it to the base date. Simple. Okay. Similar kind of problem.
Sir.
Next, average due date. So current purchase goods from Arjun. The average due date for the payment in cash is 10th June 2018. Already given. The total amount due is 1,75,800. How much payment should be made by current to Arjun if total payment is made on the following dates and interest should be considered at the rate of 15% per annum. Okay. On average due date on 28th August on 28th July. If payment is made on average due date, will there be any interest?
No.
No interest, correct? Therefore, it will be no interest, 0. If it is made on 28th August 2018, that means from 10th August to 28th August, how many days are over? 18 days, correct?
18.
Therefore, interest has to be calculated for 18 days. Right? Next, if it is on 29th July, how many days? It is paid in advance, correct? It is paid in advance. How many days advance? 10 days in August and 2 days in July. That is 30th and 31st, correct? Therefore, 12 days negative. That is discount or rebate. Clear? Simple? Next, Manas accepted the following bills drawn by Shahnaz on 8th March 2018, 4,000 for 4 months. Okay. Next, on 16th March, then 7th April and 17th May, credit period is given. On a single day, it has to be done. Very simple problem. This is clear, all of you.
Sir.
Same problem we did now. Correct. 19th June it is. Yes. Same problem, similar problem, not same. Very similar problem. We just solved.
Excuse me, sir.
Yes.
Sir, saving interest means it is similar to rebate only.
Yes, it is similar to rebate. Okay. Rebate only. They're just talking about saving. Yes. Anyone has any other doubts? Clear?
Yes, sir.
Okay. Shall we go through account current then?
Depreciation.
Yes, depreciation ಆಯ್ತಲ್ಲ ಮಲ್ಕ್ತಾ ಇದೀನೋ
No, sir.
depreciation is done. Yes. So I'll go through account current and other simple topic. Then remaining topics we'll do in the next revision class, whenever that is. Okay. Okay.
Okay, sir.
Yes. All right. Now, what is account current? It is a running statement, correct? It is a running statement that will give me the total balance, including the interest. See, difference between a normal ledger account and account current is what? It will also show me the interest that is due, correct? Everybody remembers this? So, account current is a running statement of transaction between two parties for a given period, and most important, it includes the interest charged. Yes, write down account current. Account current is a running statement of transactions. Account current is a running statement of transactions between two parties for a given period and includes the interest charged. Account current is a running statement of transactions between two parties for a given period and includes the interest charged. Clear? Next. It is a form of ledger account. It is a form of ledger account. Yes, now all of you concentrate. Done? What are the other things we learned about account current? It helps in confirming the balance payable or receivable along with interest as on a specified date. Yes. So when you are presenting the account current to someone, it is as on a particular date, correct? If he pays the next date, then again interest will change. As on that date, that is the interest amount. Okay. It is just an extension of average due rate. Correct? When do we apply account current? When frequent transactions are regularly taking place between two parties. That, like for the example I gave you, purchase also happening, sale is also happening on multiple dates, then account current is the best. Yes, it gives you a clear picture. Next. In case of consignment also, account current is helpful. Yes. In case of consignment also, account current is helpful, and also to set out the transactions between banker and customer. Remember, balance of products method. Yes, that done in the class. All right. Okay. Next. There are two parties in account current. Yes. One who prepares or renders the account, and second is the party to whom the account is rendered. Yes. First one is a person who renders the account. Second one is a party to whom the account is rendered. That time, what do I call it? If Mr. B is preparing the account current, if Mr. A is preparing the account current or rendering the account current and providing it to Mr. B, then the heading will be what? Mr. B in account current with Mr. A. Yes. Mr. B in account current with Mr. A. Then we had learned that there are different methods of preparing account current. Yes. First one is individual transaction method. Yes. Under that you have again what interest is computed for each transaction, correct? Individual transaction method. It can be interest method or product method. For each transaction, when you compute interest, it's called individual transaction method, that is interest. Next is product method. Remember? Next is balance of product method. Correct? Wherein you find out what is the debit balance and credit balance separately. Find out the debit product and credit product. Nenpidya. In case of banks. Yes, in case of partner account. Yes. We find out the product of balances after each transaction. That is cumulative. We'll have one cumulative balance. Yes. We'll have one cumulative balance, one debit balance, one debit product, and one credit product. Why? Mainly because debit product or debit balance and credit balance normally attract different interest rates. Yes, Rakshita, do you remember? Yes. The debit balance will have a different interest rate. The credit balance will have a different interest rate. So you prepare both separately. That is my balance of product method. And then computation of number of days. There are again two methods. One is forward method and one is the backward or epoch method. Remember this? Forward method or epoch method. For opening balances, when you're calculating the number of days, will you include the opening balance or exclude? Yes. We will include the opening balance. Be confident. You all know it, but you are hesitating. Yes. Hinging anta idira adane unmute ಮಾಡಿ yes ante. Okay. Yes. You will include the opening balance, right? Remember why? Because the actual transaction took place in the previous date. Correct. So that is why, if you remember my example I had given in the class, the transaction actually took place in the previous period. So at that time, in that period, you have already excluded the date of transaction. Now again, don't exclude the date of opening balance. So for opening balance, you include the opening balance also when you're calculating the number of days from the date of opening till the date of closing the account current. Yes, for all other dates, you will calculate from the due date till the date of closing and you will exclude the due date. Clear? Yes? All right. Under epoch method, how do we calculate? We calculate the number of days are calculated from the opening date till the due date. Yes, under epoch method, what do? We calculate from the opening date till the due date. All of you understood? Normally, in forward method, you exclude the due date. Under epoch method, you will include the due date. Yes? Correct. Under epoch method, you will include the due date. And then last concept under account current is red ink interest. Remember this? What is red ink interest? If the due date falls after the closure of the account date or the closing date of the account current, then you calculate interest at a negative rate. That is called red ink interest. Yes, normally it is written in the opposite side. Normally it is written in the opposite side, the opposite column. That's it. This is my account current theory. All of you remember? Yes, let us go through the CAPS material. Yes, tell me the page number. Page number 42. Yes. Account current. Yes, one of you read.
Account current. Account current is a running statement of transaction between two parties for a given period and includes the interest charged. It is a form of ledger account. Helps in confirming the balance payable, receivable along with interest as on the specified date. Parties in account current. One who renders the account, example Mr. A, to whom the account is rendered, example Mr. B. Heading of an account current shall be Mr. B in account current with Mr. A. Methods of preparing the account current. With the help of interest tables, individual method, interest is computed on each transaction. By means of product method, computing product for each transaction and then computing the interest. By means of products of balances, periodic balance method used in case of banks, product of balances after each transaction is obtained and then interest is computed. Methods of computing days. Forward method. Number of days are calculated from the due date on the transaction to the date of closing the accounts. Backward or epoch method. Number of days are calculated from the opening date of the statement to the due date of the transaction. Heading interest. If the due date falls after the date of closing the account, then interest from the date of closing the accounts to such due date is called heading interest or negative interest. This implies the rebate or discount will be given if settlement is made as on the closing date of this.
Clear? Okay. Again, let us go through the RTP problem. Question number 12. No, sorry, 11B. Question 11B. From the following particulars, prepare an account current to be rendered by X to Y at 31st December, reckoning interest at 10% per annum. So it is rendered by X to Y andre Y in account current with X, correct? Y in account current with X. Okay. Now, balance owing from Y 600, goods sold to Y 50, cash received 650, goods sold 700, goods sold again 40, cash received 350. Y accepted excess bill at 3 months date, goods bought from Y, goods sold to Y, cash received from Y. Shall we solve this? Yes. Write down. Y in account current with X. Y in account current with X. Within bracket, write down. Interest from due date to 31st December 2022 at 10% per annum. Interest from due date to 31st December 2022 at 10% per annum, close bracket. Okay. Now open the account current with the columns date, particulars, due date, amount and number of days, then product. So date, particulars, due date, amount, number of days, product. 6 columns on the left and 6 on the right. Date, particulars, due date, amount in rupees, number of days, product. I repeat the columns: date, particulars, due date, amount in rupees, number of days, and product. Date, particulars, due date, amount, number of days, product. Done? Yes, all of you. Quickly, let us write down the transactions one by one. First one, July 1. July, 1st July, what is the rule? Balance owing from Mr. Y.
To balance brought down.
To balance brought down, due date will be 1st July itself, amount rupees 600. On the debit side, write down 1st July, to balance brought down, due date is 1st July itself, amount rupees 600. Done? Next, second one, July 17th, goods sold to Y 50.
To
So,
sales account.
correct. To sales account, date is July 17th. Date is July 17th. To sales account, due date is July 17th itself because I've not given the credit period. July 17th itself, amount rupees 50. Done? Next. 1st August, cash received from Y. Therefore, by cash account on the credit side. Credit side, write down August 1st or 1st August. By cash account, due date is 1st August itself. Due date is 1st August itself. Amount rupees 650. Amount rupees 650. Next. 19th August, goods sold to Y. 30th August also goods sold to Y. So again, August 19th to sales account, August 30th to sales account on the debit side. Due date will be 19th August and 30th August respectively. Amount will be 740. 700 and then 40. Done? Done till here, all of you? Next. 1st September, cash received from Y. So again on the credit side, September 1st by cash account. Again due date is 1st September, rupees 350. Rupees 350. Done? Next. Again 1st September, Y accepted excess bill at 3 months date. Yes, what is the entry? Y is accepting means bills receivable, correct? So by bills receivable account on the credit side. By bills receivable account on the credit side. So 1st September by bills receivable account. Due date is 3 months date. 1st September will become due date
4th, 12th.
September. 4th December. Very good. Yes, 4th December. Due date is 4th December. So amount is rupees 250. Amount rupees 250. Next. October 22nd. October 22nd. Goods bought from Y. That means on the credit side, 22nd October by purchases account. 22nd October by purchases account. Due date will be same. 22nd October. Amount is rupees 30. Amount rupees 30. Next. November, 12th November. Goods sold to Y. So again on the debit side to sales account. 12th November to sales account. Due date is also 12th November. Amount rupees 20. Amount rupees 20. Last one, December 14th. Cash received. So again on the credit side by cash account on 14th December rupees 80. Due date also will be 80. Due date also will be same 14th December. All of you done till here? Yes. Now let us calculate the number of days quickly. Yes. For the first transaction, you have to calculate number of days from 1st July till the date of closing, that is 31st December. Yes. How many days it is? Add July, August, September, October, November, December. Quickly add.
184 days.
Yes, write down. 184 days. 184 days. Next transaction, July 17th. So just minus. How many days will you minus from 184?
31 days.
No. 184 you already calculated for 1st July. No. Next is 17th July. You have to exclude the due date also, correct? So
we
minus
have to
17.
less 31 and add 17.
No, you don't have to add 31. 184
Yes,
minus 17. 184 minus 17 stay.
167.
Correct? Did you understand?
Yes, sir.
Last date is 184. Now you have to exclude 17 days. So minus 17. It is 167 days. Next one. August 19.
165.
Not 165. August 19.
148.
No. Calculate properly.
134
Do this properly. August 1900. Do it properly. In August month, how many days? 31 minus 19. Plus again 30, 31, 30 and 31.
134 days.
Correct. 134 days. Did you all get it? August month, how many days? Yes. August month, 31 minus 19, 12 days. Okay. September 30, October 31, November 30, December 31. Add all of it. 19 plus 31 plus 30 plus 31 plus 31. 31 plus 30. You'll get 134 days. All of you got it?
Yes, sir.
Yes. Next. $134 days is for 19th August. Therefore, 1st August will be how many days?
152.
152 days, correct. Right? So 1st August will be 152 days on the credit side. How do we get 152? Very simple. 134 plus
90.
plus 18. Correct. Why? Because you have to exclude 1st August month. You have to exclude the due date. Correct. So you add 18. Okay. Next one. Did you all understand till here?
Yes, sir.
Everybody understood?
Yes, sir. Yes, sir.
Yes. Next one. 30th August. Very simple. August you consider one day and then you add 30 plus 31 plus 30 plus 31. How many days?
123.
123 days. Write down 123 days. 123 days. Next on the credit side, 1st September. 152 minus 30. 31. Sorry, you have to exclude 1st September also. 152 minus 31. Correct? Are you understanding? Yes. All of you understanding? Yes? Rochelle, did you understand?
123 minus 2.
Yes. 152 minus 152 days is the 1st August, correct? 1st September ಬರ್ಬೇಕಂದ್ರೆ ಹೆಂಗ್ ಮಾಡೋದು? 31 days have to minus. Why? Because August 30 days, 1 day of September. That have to minus. 152 minus 31 days, that is 121 days. Did you all get it? Next. December 4th. December 4th and 31 minus 4, that is 27 days. Write down 27 days. Next. 22nd October. Very simple. 31 minus 22.
Sir, it's December 14th.
14 henge. December 4th. 1st September and 3 months is the due date, credit period. 1st September plus 3 months is 4th December. Okay. So 22nd October, 31 minus 22 plus 30 plus 31. How many days?
27 days.
No.
17
October. See, October ali 31 minus 22, that is 9 days. October 9 days plus 30 days of November plus 31 days of December. 70 days. Correct? 30, 31, 61 plus 9, 70 days. All of you got it? Yes, Vairalakshmi, understanding? Yes, write down 70 days in for 22nd October. Next, December 14th, how many days? 31 minus 14, 17. 31 minus 14, 17 days. Last one, I think November 12 we have not yet done. 12th November, on the debit side, 12th November you have, that is 30 minus 12. 18 plus 31, how many days? 49 days.
49.
18 plus 31, 49 days. All of you understood how the days are computed? Yes, now quickly multiply and tell me the product. First one, 184 into 600.
1,10,400.
Yes, write down 1,10,400. Next one, 50 into 167.
8,350.
8,350. Next, 700 into 134.
93,000.
Write down simultaneously. 93,800. Next, 40 into 123.
4,920.
Then 20 into 49.
980.
980. Next, on the credit side, 650 into 152.
98,800.
98,800. 98,800. I repeat the debit side products. 1,10,400 for the first transaction. Next one it is 8,350. After that 93,800. Yes. Next one is 4,920. After that 980. All of you got it? Yes. Now the credit side we are starting. It is 98,800 for the first transaction. Second transaction 350 into 121. 42,350 rupees. 42,350. Done. Next 250 into 27. 6,750. 6,750. Next 30 into 70.
2,100.
2,100. Then 80 into 17.
1,360.
1,360. That's it. Now, shall we find out the balance of the product column? Write down 31st December by balance of product. By balance of product. Yes, total the debit column. Total the debit column of the product.
2,450.
2 lakh.
18,450.
218,450. 218,450 is the total of the debit column. Okay. Therefore, balance of product is
67,090.
correct. 67090. By balance of product on the credit side in the product column, it will be 67090. All of you understanding? Yes, Sumanta? Correct? 67090. Therefore, now calculate interest. Let me see who remembers.
18.38.
18.3.
Excellent. Yes, if you remember, we have already multiplied number of days. Therefore, you will not multiply number of days again. You will calculate interest only for 1 day on the balance of product. Nenpidya? Yes, below this write down interest is equals to by balance of product. When I write down interest is equals to balance of product multiplied with interest rate divided by 365 days. Interest rate divided by 365 days, which is equals to 67,090 into 10% divided by 365, which is equals to rupees 18.38. Now tell me, this is interest income or interest expense?
Income.
Income, sir.
Income. Why? Because it has a debit balance, correct? Debtor will pay me interest, so it is my income, correct? All of you. So to interest account and debit the party, correct? Therefore, on the debit side, write down 31st December to interest account in the normal amount column, not in the product column. In the amount column, write down to interest account rupees 18.38. 18.38. On the credit side, write down 31st December by balance carried down. By balance carried down, how much?
68.38.
Perfect. 68.38. Total of the amount column on the debit side. Total of the amount column on the debit side.
1,428, 422, 428.38.
1428.38. Total of the amount column on the debit side is 1428.38. Yes, Krishna, are you there? Understanding? Yes, 1428.38 and balance carried down is rupees. By balance carried down, the amount column is 68.38. Total is again 1428.38. All of you understood this?
Yes.
Clear? Anyone has any doubts? Yeah, one of you wanted the interest formula again. I'll tell you. Interest is equals to balance of product multiplied with interest rate divided by 365 days. Clear? Yes, Gautami? Okay.
Yes, sir.
Okay.
Thank you, sir.
Anyone has any doubts?
Sir, how did by balance credit of come to 68.38?
68.38, 1428.38 is there, no, on the debit side, minus all the credit column. 650 plus 350 plus 250 plus 30 plus 80. Minus it, you'll get 68.38.
Okay.
Clear?
Yes.
Others, any other doubts? Suman, are you there? Did you understand? Sanjana, where are you? Yes.
Yes, sir.
All of you understood?
Yes, sir.
Sir, lastly interest in amount column is there.
Yes, in the amount column, correct. Not in the product column. It has to be in the amount column. On the debit side, because it is my income. Clear?
Yes.
All of you understood?
Yes.
sir.
That's it. Okay. Good night, all of you. Right? Revise whatever we have done. Be in the flow. Don't miss the flow now. Yes, now you have to be in the push it to the next care. Yes. Revision session means you have to push it in the next care. Your exams are hardly any days away. You blink and you open, it will be there. I'm telling you guys. Blink and open, your examination day will be there. So every day you have to read. Yes, try to cover up whatever I've done in today's class, but tomorrow try to finish it off. Try to finish it off. You can. Yes, my portions is not that lengthy and complicated. Simple agide. Whatever is done today, by tomorrow, finish it off. Okay?
Yes, sir.
That's it, all of you. Thank you so much, guys. Now, just I think 2 chapters are pending: inventory and share on approval, which I'll be doing it in whenever I meet you guys next. Okay? Thank you, all of you. Bye.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Sir, bye,
Yes.
sir.
Thank you.